Hello, everybody. Welcome to my solution walkthrough for problem 15-2. This is the Intermediate Accounting 17th edition. Textbook authors Don Kiso, Jerry Weingen, and Terry Warfield. This question used in this presentation is copyright 2019 by copyright John Wiley and Sons. Wiley, all rights are reserved. This is for educational purposes only. Can't use it for any other purposes other than educational. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation and bad dad jokes and other terrible humor are those of Bennett Tchaikovsky and not the authors of the textbook or Wiley. Okay, so right over here, let's go ahead and take a look over here. So we have treasury stock, transactions, and presentation. The Clemson Company had the following stockholders' equity as of January 1st, 2020. Okay, so we've got common stock. We're going to have issued. We also would have authorized, but they're not telling us that. Issued, outstanding. So issued is going to be 20,000. Outstanding is going to be 20,000. Par value per share is at 5. So my common stock at par is going to be 20,000 at 5 or 100,000, which is what it's showing right up here. I have additional paid-in capital common stock. This is at 300,000. And then I've got retained earnings of 320. Okay. All right, so right over here, what I'm now going to go through and do so for February 1st, okay, so prepare the journal entries to record the treasury stock transactions, assuming they use the cost method. Okay. So right over here, so Clemson repurchased 2,000 shares of treasury stock at a price of 19 per share. So when I do treasury stock transactions to 1/21, so 2/1/20, I'm going to debit cash for the amount, I'm going to debit treasury stock for the amount that I'm paying for the shares, which is going to be 2,000 times 19. I'm going to credit cash for the same amount. I'd also need to show a description to record purchase of treasury stock. So what happens over here to my chart? So let's go ahead and add in a few more columns. So I have treasury stock. Okay, so this is going to be showing up as a negative, right? Because right over here with treasury stock is, increased with a debit because I'm buying back my own shares. This is the Home Depot. This is by far the best one to look at in terms of exploring treasury stock. As you notice, the treasury stock is showing over here as a negative amount in shareholders' equity. This is how we go through and do it. It reduces owner's equity because essentially I'm buying back my own shares and returning them to the Treasury. What also happens here, though, is that my outstanding shares are now going to decrease. Right, my issued shares will have no impact, but my outstanding. So the issued shares are not going to change. So again, when we buy back our own shares, it's going to decrease the amount of outstanding shares because after I, buy back my own stock, this 20,000 shares is no longer outstanding. Okay. So March 18th. So March 1st. I sold the 800 shares of treasury stock purchased above or reissued at 17 per share. Okay. So now I'm getting cash of 17 times 800. So I'm receiving 13.6. Now, how much, and this again, so this is going to be 2,000 times 19. This is going to be 17 times 800 or 13,600. Now, what I'm going to do is I'm going to credit treasury stock for what I paid for the shares. So this is going to be 800 times 19. And what you're going to notice here is that my credits exceed my debits. Normally, we would say that this is a loss, but we don't recognize gains or losses when we sell our own shares. So what I'm going to do here is I'm going to say, well, 15.2 minus 13.6 is 1,600. So this is going to be a debit to retained earnings. So this is how I'm going to go through and record this transaction when I have a loss sort of situation. Okay, so, or if I sell shares, treasury shares below than what I paid for them. So on 3/1, my shares outstanding are now actually going to be increasing by 800 because I'm putting those back out into the market. My retained earnings are going to be decreasing by 1,600. And my treasury stock, I'm going to go ahead and credit this balance over here for 15.2. Okay. So again, on the owner's equity section, when I buy back my own shares, it's going to show as negative. When I resell them, they're going to show up over here as a positive. Okay. So 500 shares of the stock repurchased above were reissued at $14 per share. So we have another bad situation, which is going to be right over here. So we've got on 3/18/20, the amount of cash that I'm going to be receiving is going to be 500 times 14. But how much did I actually go through and pay for those shares? Well, for the treasury stock, this is going to be basically bottom at 500 times 19. So right over here, I've got a credit over here for 9,500. Same problem. I sold the shares for less than what I paid for them. I don't recognize a loss. Rather, what I'm going to do is I'm going to debit retain earnings for the difference or for 2,500. So that's what I do on March 18th. So let's go ahead and take a look at what happens over here. So my outstanding shares are now going to be increasing by 500 because, again, these pulled them off the market. I'm now putting them back onto the market. Okay, over here, my treasury stock is also going to be increasing by 9,500, but I'm going to have a hit to my retained earnings, which is going to be over here at 2,500. So that's how I'm going to go through and record those transactions on March 1st and March 18th. Now I'm selling over here on April 22nd. Okay, so I'm on April 22nd, I'm selling 600 shares at 20. Okay, so let's do the cash first. So I've got 600 at 20. So this is going to be 600 at 20. Okay, so what did I originally pay for the shares? Well, I paid 600, I paid 19 per share. Now, here we have an interesting situation because now we need a credit in order to balance this. So the amount I need to balance is going to be $600 or the dollar price difference times this number of shares that I sold back. So here I'm going to credit additional paid-in capital treasury stock. Okay, so right over here, I'm crediting additional paid-in capital treasury stock. And let's go ahead and see what happens here. So on 4/22, I'm putting out another 600 shares out there. My treasury stock balance is now going to be increasing by 11.4. My retained earnings aren't going to be affected, but I am going to have additional paid-in capital treasury stock of 600. So that, in summary, is how I would go through and record these transactions. Now, let's take a look at the stockholders' equity section as of April 30th, 2020. So at the end of the period or through this, we're now also going to have net income. My net income basically for the first 4 months was 130,000. So I'm going to go ahead and put this over here under retained earnings. So what does this now look like? And let's go ahead and do this here. Okay, so my ending amounts over here in terms of my shareholders' equity is I'm going to have totals. My issued shares never really change unless I actually do a stock issuance, but my outstanding shares did change. So for my outstanding shares, what happened was I started with 20,000, subtracted the 2, adding the 8, adding the 5, and adding the 6. So now I'm at 19,900 shares. Let's just make sure that's right. So like 500, 800, yeah, that looks good. So my par value per share doesn't change. Common stock at par doesn't change. Additional paid-in capital doesn't change. My treasury stock is now going to be at 1,900. If we think about this, the number of shares I'm still holding in treasury is the difference between the issued and outstanding, or 100 shares at $19 per share, which is equal to the amount of the treasury stock that we have. My additional paid-in capital treasury stock is at 600. Over here for my retained earnings, it's now going to be at a total of 445,900. So when I'm doing the stockholders equity section, here's what I would probably go through and do. So we have Clemson Company, balance sheet, partial, as of 4/30/20. Okay, so over here, what we would do is owner's equity or stockholders equity. Okay, so we're going to have common stock at par, common stock, par. Let's cheat. Let's check it, baby. Okay, common stock. Here we go. Okay, so this common stock, blank shares authorized, 20,000 shares issued, and 19,900 shares outstanding. Say common stock at par. Okay, just one moment. So this is going to be showing up over here as $100,000. Then we're going to have additional paid-in capital, common stock, right over here. We can also show at this time additional paid-in capital, treasury stock. You can really do it at any other point. So it can be at 600. Okay, and then over here, we're going to have our retained earnings at 445 less treasury stock. So my total shareholders equity, or total stockholders equity, is going to be at $884,600. So when I look at this, the thing that you want to just kind of keep in the back of your mind is that when we're going to prepare financial statements, right, the Securities and Exchange Commission encourages us to look at other filings and to copy the disclosures, and a lot of it not to modify the disclosures based on our own situation. It just makes things easier. So that's how we go through and make this make this happen. So again, you can use the charts. You don't have to. I like to do it just because it makes it easier for me to figure out what's happening. So with that all being said, I want to thank Wiley once again for allowing me to use their textbook and use their questions and share them with you. Please don't forget to like and subscribe. If you're looking for other solutions, please feel free to ask for them in the comments to the video. Have a great day, and I look forward to seeing you on the next video. Have a good one.